Joining me right now via telephone, the author of really a good book, particularly with what's going on in the economy right now. It's called The Little Book of Main Street Money, 21 Simple Truths That Help Real People Make Real Money. He's the former personal finance columnist for the Wall Street Journal and now director of financial guidance for MyFi. It's a unit of Citicorp, and he joined us from the great city of New York today. Jonathan Clements by phone. Jonathan, thanks for being with us in Florida today. How are you?
Hey, I really appreciate you having me on, Doug.
Good to talk to you. And before we get into the book, how are things in the city today? Are people in a good mood up there?
You know, the people are in an okay mood. You know, we've had a lot of rain here in the New York area over the past couple of weeks. We're still waiting for summer to arrive.
Watching the U.S. Open golf, it looked like a lot of rain came through there. So it's been a wet spring up there, hasn't it? Early summer and spring. So.
Yeah, but if they want the Olympics to come to New York, we'll be good for the swimming event.
That's right. Well, just as we talked before we went on the air, I mean, you wrote a column for such a long time with the Wall Street Journal, giving people tips on their finances, and right now people, I guess, are just really searching for answers. I mean, I guess people always look for tips here and there, but none more than in the last 6-8 months, right?
Absolutely. I mean, it's been the most extraordinary time, and in many ways, we're now paying the price for a decade of financial foolishness. I mean, you look back over the past 10 years, you think what's gone on. I mean, forget what the government did, forget what corporations have done, and just think about ordinary investors. I mean, in the late 1990s, we had the old internet stock boom. Earlier this decade, we had the housing boom. We saw a lot of families take on a mountain of debt, not just mortgage debt, but also credit card debt. And we saw the savings rate go to practically zero. I mean, all of those things set us up to be in terrible financial shape coming into the current recession, and clearly the slowdown in the economy has made it even worse. The good news is that the economic downturn and the fall in the market seems to have brought people back to their senses somewhat. I mean, in April, we had the highest monthly savings rate in 14 years. It wasn't a great savings rate, but we were at 5.7%, which was good to see. Over the last 6 months or so, people have started to pay down their credit card debt. Again, that's another good sign. Let's hope that as the economy recovers, people continue with their prudent ways, and they continue to save and they continue to pay down their debt.
Yeah, my parents were depression kids. They grew up in that period where you really learned the value of a dollar and how to save it. And I think somewhere along the line, people lost that way of thinking about money. I don't know what exactly caused that, but I guess things like this will bring you back to reality, won't they?
Well, I think the depression generation were sufficiently fearful about the future and had lived through lean times, so they were saving so that just in case it ever came back again. But of course, my generation, all we've ever seen is prosperity. Mm-hmm. So in that era of great prosperity, the feeling is, hey, why not take a lot of risk with your investments? Hey, why do you need to save? The market seemed like a low-risk place to be. The real estate market seemed like a low-risk place to be. It just didn't seem to be a lot of reason to save diligently. Now, of course, we've had the closest we're ever going to get to the Great Depression. At least I hope it's the closest we're ever going to get. And maybe it'll bring around a change in people's financial attitudes.
Yeah, that's one of the chapters in your book, reading through it the other day. Even the best investors need to be great savers. I mean, you have to take some risk in investing, but don't put it all in one basket. I mean, that's an old proverb, I guess, but that's very true, isn't it?
Now, if you're going to make any money with your investments, right, you've got to have a decent sum invested. If you start with $100, it doesn't matter what rate of return you get. It's still not going to amount to a hill of beans. But if you're diligently saving every month and you got a decent sum invested, then when you go out and you get those good returns, it actually means something in terms of dollars and cents. So yeah, being a good saver is critical. And then when you go to invest, it is important to be diversified. I mean, you should not be putting everything on a couple of stocks or a single rental property. You really want to spread your bets widely. And what that means for most people is they should have something that looks like a balanced portfolio. With maybe 40% of that portfolio in bonds, 60% in stocks, and that 60% stock portion, you want to be globally diversified. You want to have some U.S. stocks and some foreign stocks. You probably want to tap into those markets using mutual funds or maybe exchange-traded index funds, so you really are well diversified. That won't stop you from losing money, but it'll probably stop you from being totally wiped out by a single rotten stock or by ending up with a house that you can't afford the mortgage payments on, and you end up in foreclosure.
Talking with Jonathan Clements, the author of the little book of Main Street Money. Now, how about what happened with the stock market? Really, people losing a lot in their 401ks and maybe the IRAs, and the feeling that the whole system is rigged. Is that attitude going to go away? Are people going to get back into it? Maybe the average investor or people investing through their work plans, is that going to come back, you think?
It's hard to tell how people are going to react, but I would argue that, well, nothing is guaranteed. This is a great time to be an investor. I mean, remember, one of the basic tenets of investing is that risk, to earn high rewards, you have to take risk. Well, ask anybody these days. The financial markets seem risky. People are terrified of stocks. They're even nervous about anything other than government bonds. And when people are nervous like that, when they perceive the markets to be risky, there's a decent chance the returns in the years ahead will be pretty decent. So, again, no guarantees, but, if I was, as an investor, I look at the markets today and I think they look pretty attractive.
I would think with the values as they are now, there's still companies that were good last fall are still good now. The bad companies are bad companies no matter what. So I would guess the value is there right now if you know where to look, right?
And yet, that's not the way people perceive it. When Macy's holds a sale right after Christmas, everybody rushes in and buys because things are 40 or 50% off. Now we've got the stock market at 40 or 50% off, and everybody's terrified.
Yeah.
It doesn't make any sense.
How about, we're hearing a lot now about the global economy and monetary situation in Europe, maybe one currency eventually. I don't know if that ever is going to happen, but, there's talk about that. The dollar against some of the European money is down. Is the dollar going to come back? Is America still going to be, the leader as far as the dollar goes, in your opinion?
It's really hard to tell. I mean, predicting, currencies is even harder than predicting the stock market.
Sure.
I mean, people who try to predict the financial markets, well, they exist to make astrologers look good.
Right.
It's just so difficult to forecast the future. But if you're concerned that the U.S. dollar is going to weaken, that we're not going to be as powerful or as dominant as we have been in the past, then that's an additional reason to have a globally diversified portfolio. Because if you have, say, 30% of your stock market money invested in foreign stock funds, and the dollar weakens in the foreign exchange markets, that should add to the gains on your foreign stock funds.
It seems to me that it's always been the best bet to bet on ourselves, bet on America, and I don't know why people would be that nervous about it overseas. I mean, there's always fluctuations about it, but I think U.S. is still the leader as far as I think in most cases innovation. I mean, there's not taking anything away from any other countries, but we are still the strongest economy in the world as far as I can tell.
And if you're an investor, you probably want to have the bulk of your stock portfolio invested in U.S. stocks, not simply because you're making a bet on the U.S. economy, but also you have to think about, well, why do we save and invest? We save and invest now so that we can spend in the future. So when are we going to spend most of our savings? Well, in retirement. And what are we going to spend it on? Well, predominantly we're going to spend our retirement savings on goods and services that are produced in the U.S. So if you're going to be spending on goods and services